Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. We've talked a lot about office towers and the challenges for commercial property investors when so many office buildings are vacant. But commercial property is much broader than just CBD workplaces, and this is where we start to look at alternative real estate. Think pubs, hotels, marinas, that type of thing. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Julian Biggins is the Joint Chief Executive Officer at a global alternative asset manager, MA Financial Group. Julian, welcome to Fear and Greed.
Thank you, Sean, and thank you for having me on the podcast.
I don't really want to talk about office towers, but before we talk about everything else, what's the view on office towers at the moment? Is there any optimism out there about them?
I think office towers, they still have a very big place in the commercial real estate market. So, I always look at supply and demand, and, the office tower is a core component of running any business. For many businesses, there is obviously a point of disruption here that we're going through post-COVID and sort of how the office tower gets used. But I think, over the long term, it will still be a very important part of the market. It's just going through that point of disruption.
Okay. So MA Financial, tell me where you invest. Just give us, so before we get into what we want to talk about, I want to hear about you first.
We invest across the alternative asset spectrum. And I guess that's the alternative asset spectrum is a very new terminology that people are focused on, but whether it's equity or debt, it's generally in the private markets, so it's not in a liquid strategy. And we're looking to provide sort of outsized returns when we look at the risk-adjusted nature of those returns. So, really looking at things that we can buy in the private market that we can do a lot of deep due diligence on and provide investors with certainty and some form of upside, but they're generally in liquid strategies.
Okay, and so what sort of assets are we talking about, whether you've bought into them or even if you've just looked at them and decided not to?
Well, I think if we focus on the core real estate side, I've sort of been around the space for 25 odd years and looked at the listed and unlisted space. Our focus in investing is across both core and what we'll call non-core real estate. We have about $6 billion sitting across the real estate space. Probably about $2 billion of that sits in real estate credit, and the rest sits across core real estate and alternative real estate. The one we'll focus on, we bought a pub portfolio back in 2017. There was about 36 odd pubs, your corner block style pubs sitting very close to the train stations, very good land banking. That was about a $700 million investment for us. And that turned out very well over sort of 6 or 7 years, and we still own it today. More recently, we've bought the largest marina portfolio in the country called Dalbora Marinas, and we can talk about that a bit later if you'd like. And we've also recently bought a hotel accommodation asset in Melbourne, and we also like that strategy. So one of the differences for us is more around the operating nature of the asset. We both own the land and we operate the asset, and that's an important component for us in terms of extracting returns, but also managing downside risk for investors.
Okay, so let's talk about pubs. And I mean, it's illiquid is something that you highlighted at the beginning. And the thing about what you do is if you're investing with MA Financial, at times it is actually hard to get your money out. And that's the nature of the beast in a sense. I think that's what you're saying. What's the pub market like at the moment? Yeah, well,
so just to clarify the liquidity point. So the funds do provide liquidity. It's more talking about the underlying asset, that it's not traded on an open market.
Yeah, okay.
So it's not on a listed market. It's not like a listed bond or a corporate. But the pub market, when you think about the dislocation that's come through the commercial real estate market since interest rates started increasing, many assets, the bid-ask spread between what someone wants to sell that asset for and what someone wants to buy that asset for is too wide, and they're just not trading. Interestingly, in the pubs, there's a lot of publicans that have made a lot of money out of pubs, and the way that they invest their cash flow that comes off those pubs is they buy more pubs. So we've actually had the benefit of, we've sold around $225 million of pubs in the last 12, 18 months. And they've really been very close to the valuation. And they've actually been at a slight premium to the valuation that we held them in our books at as we came through sort of post-COVID and interest rates rising. So the pub market's a bit of an anomaly in the commercial real estate sector, as they're actually still quite liquid assets if you sort of talk about $20 to $50 million pubs. And so that's worked out very well for us. So we one of the things here around sort of, I guess, alternative real estate and some of the benefits you get, because not everyone's sort of looking at that space, and the large institutions need to deploy so much capital into their strategies, that you can often get premium returns that are looking slightly off the fairway. So, for example, back in 2017 when we bought Red Cape Hotel Group, we bought essentially what is, core real estate in terms of the location, the quality of the underlying land, the nature of the cash flow is very robust. And we're buying on a sort of 9.6% yield, which is, probably 300-400 points premium to what people were paying for office buildings or shopping centres at the time. So you're able to extract these better returns from, looking slightly off the fairway where the institutions aren't playing.
Stay with me, Julian. We'll be back in a minute. I'm speaking to Julian Biggins, Joint CEO at Global Alternative Asset Manager, MA Financial Group. What makes, $20 to $50 million pubs, and I think what you're saying there is they're almost not big enough for some of these institutional investors. And so where's the value in a pub? Is it poker machines still?
No, they're more diversified than that. So it's sort of, call it entertainment between F&B, gaming, etc. So, and there's also the real estate that sits under it, right? So lots of pubs have very high quality real estate that have sort of land value that appreciates as the population densifies around that pub, and there's alternative use for that at some point in the future. The simple thing here, like with our marina strategy, in buying the Dalbora marinas, it was a very complicated transaction with the vendor. We bought the marinas for about $220 million. So again, it's a bit small for the institutions when they're managing tens or $100 billion of assets. And we bought, and I sort of say it's waterfront Sydney real estate because it is.
Literally is, yeah.
It is. And we bought that on an 8.5% yield.
Right, which is a lot higher than your average property purchase.
Correct. If you bought Point Piper real estate, you might get two. It's a phenomenal asset class that can't be sort of replicated either. You can't get a DA to build a new marina. So we love the cash flow that comes off that.
So where are these marinas?
About 60% of the marinas sit around sort of the Sydney harbour. So we've got Rush Cutters Bay, which many people will be familiar with if you're in Sydney. We've got the Spit over at Mossman. We've got one up at Acuna Bay in Pittwater. But there's 13 of them around the country. And they generate, so for investors in our fund, they generate about a 7.25% yield, and that yield's growing. It's also very tax efficient. And our strategy there is to take it from is $300 million today in sort of value. If we can take that to a $500-600 million portfolio, then it becomes very interesting for an institution.
Yeah.
And the institutions will pay a premium for getting scale. So one of the common strategies for people like that have a smaller sort of entry point is that you can build portfolios of scale and then sell them to the institutions who will pay a premium just because it's scaled. It's quite a useful strategy.
And so with the marinas, the income, mooring fees, but I'm not being very I know nothing about this sector at all. So mooring fees, but what else?
So roughly about half your revenue comes from the berthing fees. So someone puts their boat into a pen, into a berth, and they have to pay a monthly fee. If they don't pay their fee, you lock their boat up. So it's quite it's quite safe. Boats are obviously quite a valuable asset. So the mooring fees aren't a large proportion of the person's wealth. So they're quite insensitive to escalating berthing fees. And then you've got the retail component that sits next to the marina. You've also got slipways that maintain boats. So there's lots of stuff that sort of comes off the boating community as well.
Okay.
And just to give you an example, the growth, the earnings growth in this asset it's been on the pens alone or on the berthing fees alone has been about 10%, year on year, which is very high. The other reason we like operating real estate is you have these sort of levers, you have this underlying exposure if you've got the expertise to manage it, to generate real growth. I think if you look at the environment we're in with interest rates rising, I think they're higher for longer. That's a given. But you're buying these assets for 5 or 10 years. You're not buying them for a 3-month trade. If you've got the operational expertise to increase the earnings, you can't rely on just increasing valuations from lower interest rates anymore. That was the last 3 decades.
Okay, so we've talked pubs, we've talked marinas, and the third category again, remind me?
So the third category is accommodation hotels. So lots of people will be familiar with the accommodation space. Disruption's also important to us. So Airbnb's been around for a long time. Leisure, people's desire to enjoy life, I guess, post-COVID is an important macro thread for us. And buying these accommodation hotel assets, again, you own the freehold land, so you have the benefit of the land. And if you can operate them and have the expertise to operate them, you can manage the downside risks. So we can generate an 8% return for investors. we're trying to generate over a 5 or a 7 year period of 14% total return. And you're really doing that through operating the assets and operating them well. And one of the things, I lived through the GFC, one of the things that's very important to me is having that real depth of knowledge inside our business to operate the assets. So we've probably got, call it 60, 70 people that operate maybe more actually, maybe 70 or 80 people that operate our operating real estate assets. And that's the real heart and soul of generating returns for investors.
And they're kind of 3 to 4 star style accommodation?
So the one that we bought down in Docklands is a 4.5 star asset. 95% of its revenue comes from the rooms. So it's not a complicated asset.
Yep.
The really interesting thing about the hotel is that we've bought it about 60% of replacement cost. So this is an asset that's only 4 years old. It's essentially brand new. And you'd have to pay 40% more to replace that asset today.
Yeah, right.
So that gives us a fantastic sort of, downside protection in terms of returns.
Yeah.
And it's brand new. It's not a 20-year-old asset. So we think there's really unique opportunities to sort of, this point in the cycle as we come through this interest rate disruption. It's actually a fantastic time to invest into assets if you're getting them on the right terms.
Fantastic. Julian, thank you for talking to Fear and Greed.
Oh, great. Thank you, Sean.
That was Julian Biggins, Joint CEO at Global Alternative Asset Manager MA Financial Group. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.